Trading the foreign exchange market carries high risk and may not be suitable for all investors. Trading on margin, utilizing leverage can carry an even higher level of risk that can lead to a complete loss of investment funds. So before deciding to trade the foreign exchange market or using any of our software alert products, you should carefully and diligently consider your personal investment objectives, level of experience, and risk tolerance. There is a possibility that you could potentially sustain significant loss. You should not invest any capital or trade that you cannot afford to lose. It is your responsibility to be aware of and understand all risks associated with foreign exchange trading and to seek professional advice from an independent certified financial advisor if you have any doubts. Auvoria Prime does not exercise trading authority over your trades. You and you alone exercise discretionary trading authority over every trade.
We're going to talk about some of these things, right? I love these calls because I could come on here and I could talk about my accounts. I could talk about what's going on all day long, but I want to know what's going on with you so that I can best address you as a customer on this call that's using GearBox and help you have a better experience. I see Sheldon said he's been stuck in some CHF pairs for a month. All right. I see CAD, JPY, and Euro CAD. You know, what I do know is, you know, that those have definitely, I see Steve raised his hand too. Steve, absolutely, he's got his hand raised. I love it. Steve, go ahead and let me know in the Q&A or chat box what you're thinking. All right, let's get into it here. So CHF pairs, absolutely. Euro CAD, CAD JPY, those have definitely been some of the ones that everyone's been kind of just stuck in, right? So let's talk about first how to handle risk if you end up in this situation. I think this is a really important topic for today so that people can best understand, okay, you've been stuck in a pair, you've been stuck in it. How do you best handle that risk, right? So I'm going to keep reading down these and then we're going to get into how to handle risk. David said 1% profit, less than 1% drawdown this week. I'm guessing David's either new or maybe just never got in some of these pairs other people are in. Thomas Love said 4% profit this week, finally closed GBP USD trades, which are open since 23rd of December. Look at that. Okay, so this I want to talk about because this happens, all right? We're talking about trades that have been open for 3 months for Thomas Love, right? We should even go take a look at that GBP USD trade. I'm not sure where you got in it, but many pairs trended. And the big thing I can tell you about GearBox is yes, there have been times I've held trades myself for 2 months. All right, is it ideal? Absolutely not. But if you get out of it and you make a profit, does it matter? And I'm going to show you guys an account exactly as an example myself. So this is an account, it's aggressive. It's on swing settings and it's running 6 max pairs trading with only $1,500. Pretty reckless, but the reason I want to show you this is I want to show you what happened. In 2020, August, I did 14%. September, I did 15%. October, I did 11. November, I did 18. We go to December, and December's always a slow month in the market, right? I didn't make that much. We go into 2021, January, I didn't make $1. February, I lost money. March, we just got back out and we're making money again. And look at this, you'll see where it lost money. But what's so powerful about GearBox, in my opinion, is the fact that if you understand risk management, there might be a week you take a loss. There might be a month you take a loss. This is trading. There might be a month you make no money, you break even. But the best hedge funds in America publicly report a 55% a year gain. Right now, here's an account, it's been running since July, that in 6 months has beat the top hedge funds in America. Handled risk, so a more aggressive account, absolutely. Here's a more conservative account, right? A 10K on a swing setting with only 3 max pairs trading. And guess what? The drawdown's half of what it was on that account with half the pairs trading. Makes sense, right? People always ask me, when you're increasing your risk, what's the proportionate to that? And well, if we take a look between these 2 accounts, the difference is double the pairs trading, double the drawdown, right? So, you know, the less pairs trading, that's your risk mitigation strategy. So let's talk about some of you that maybe are stuck in a pair or 2. All right. What I always tell people, and you probably saw me educate on in my developer insights this week, and give me a second, I'm actually going to pull that up. In my developer insights this week, I'm going to pull up my Telegram. Sorry, I quit it, but I want to pull up this video and just talk about how I talked about this week, because some of you maybe experienced this on EuroCAD or even CAD JPY, where there was a chance to get out of that trade. Now, is it ideal to manually close trades? No, but in my developer insights, I sent out 2 different videos this week, and I'm going to go ahead and share my screen. I just put all my other chats over the side, so we're just looking at the GearBox chat. Here we go. I came in and first, educated. Here's my beginning. Since this week is full of red folder news, I may manually close trades in some cases. Here's my management strategy to do this. Any sequences, meaning all trades open on a single currency pair that are in profit, I'll be looking to close. Or for more advanced users, manually put stop losses at break even, right? And if you don't understand what that means, then you should have probably gone with this route. So then I practiced my own risk management plan where I went and I looked at pairs that started to get in some profit. In this case, on this account, I had CAD CHF. I went and I closed it all manually. Then we came down here and again was another example. I looked at another account. I saw AUD JPY. I still had a long way to go to the take profit, but I said, nope, I'm going to get out. But I even measured the difference. I'm looking at the take profit. I'm measuring the difference. And then I just said, nope, I'm going to go ahead and I'm going to close it out and just take my money and run. And the point in showing you guys this is because, again, GearBox can be a very simple, easy to use product for most people, where it can be, you know, what people like to consider as pretty hands off, right? But at the same time, there's definitely times with any product, I think that you need to have some bit of a manual risk management or mitigation plan. And the best thing you could do in cases where some of you are saying, hey, I've been in this pair or I'm stuck in this pair, I would say decrease your max pairs trading, get to a point where you're just running that one pair or leaving an opportunity to run one other so you can still potentially make more profit, but not risk getting into 3, 4, right? And especially as we've seen in these trending markets, you know, things have definitely been trending a lot more. So the best thing is always to decrease risk, even decrease lot sizes, which I've been educating on too recently and saying, hey, maybe this week you want to go 0.01 per 2K or 0.01 per 3K, just because of what's been going on with these markets. The other thing I would talk about is, if you can, definitely start to close many of these yellow pairs. The reason I'm saying this is we've been trading these JPY pairs for a long time. And I'm going to tell you from firsthand experience in my 3 years now using different strategies that have some form of counter trend system built in. JPY pairs have just never respected them very well. There's some like Euro JPY does very well, and CHF JPY hasn't really been troublesome, but some of these other ones have always been troublesome. I mean, GBP JPY has always been known as a wrecking ball. I've personally seen AUD JPY and USD JPY firsthand power on many softwares in my testing phases over the last 3 years. And, you know, I just, as I've continued to go, it doesn't matter how late we get into entering some of those JPY pairs, they tend to just not respect the typical signs of reversal. And a good example of this may not make sense for some people, but this is the average daily range of every single currency pair since 2014. Now, not every, but you know, the majors and minors. And when we take a look at the majors and minors here, and we look at their average daily true range, even though you might see that USD JPY is pretty close up there to, hey, it doesn't move that much. Well, again, what I can tell you about the JPY pairs is once or twice a year, they just trend, and they trend for a long time and a long time. And they don't respect a sign of reversal very often. And I've seen it over and over again, even though it looks like, hey, this would be a great pair to run because it doesn't typically move that much. No, it's these pairs, especially AUD JPY too, just once or twice a year for the past few years, I've seen it over and over. So I put them on the worst performing list. You can run them if you want. Sometimes they might make you great profit, but you might get stuck in a trade for 2 months, 3 months, take a loss before you make a profit, right? More advanced strategy. Again, they're the worst performing pairs according to all the forward and back testing data that's been done. Let me keep reading through these comments. Nick Sorensen said he closed up 2% profit, current drawdown 22% EuroCAD and USD CHF. Yeah, USD CHF, that's been another one that's been on a run. We haven't fully disqualified it. Neither did we EuroCAD. You know, we've fully disqualified some others, but when we disqualify them, how a pair gets disqualified is on my, let's go in here, see if I'm still logged in. Yep. On my one pair accounts, it pretty much blows it. So CAD JPY, even though it swung back for most people, these are a $500 account. So remember, I test everything with a $500 account running one single currency pair by itself on swing settings. The reason I do this is I want to see what anyone could be potentially facing. Or using our earliest settings or using smaller balance. Because again, $500, you're typically only supposed to run, if you have under $500, one pair, right? In between, you get to like 700, two, and above 1,000, three tends to be the rule of thumb. But when we take a look at it, CAD JPY destroyed this $500 account. AUD JPY, I also had destroy an account, one of these $500 accounts, and that tells me, okay, if a little $500 can't withstand it, then we shouldn't run it. The next thing I look at when determining whether to disqualify a pair is drawdown. If something hits over 25% drawdown, I raise an entry on it, which we've been doing. We've raised entries on many of these pairs by one. Anytime any of them had gone over 25% drawdown, that $500 account, I increased our entry to one. From where it previously was. Many of these pairs, when we started in November, they had earlier entries. CAD JPY was entering at gear 2 on swing. Same thing with CAD CHF. Many of these pairs we did not increase, but once anything ever touched over 25%, we increased it by one. If it touched 50, we increased by two. CAD CHF, looking at it right now, we're going to increase that one again, right? It's about to touch 50. So understanding these things is really the key, and looking at data on a week-to-week basis. So I look at this data every single week and see how are we performing. Euro AUD, we increased by one because it went on a bull run. Yeah, we're entering Euro AUD all the way. And let's talk about these levels here real quick too while we're here. Pull up this chart. When we take a look at Euro AUD, all right, we're entering all the way in gear 6 now on swing and gear 7 on sniper. And then after Wednesday, you're increasing by one automatically. So let's take a look at it. If it's Monday or Tuesday, you're entering in a gear 7. That means between Sunday market open to Tuesday, for you to even take an entry, this thing needs to move 426 pips with no retracement. No solid retracement, at least, right? That the Ghost server could have cleared it. And level 8 after Wednesday. So you're pretty much waiting for Euro AUD to have a 600 pip move before you would even put your first entry into the market. That makes sense. I think for anyone who studies the way many of these pairs move, that makes sense. But we continue to go, and look at this data, and we'll see what pairs have continued to perform the best. And it's been the GBP pairs with these later entries. When you look at GBP NZD, look at GBP USD, GBP CAD. Now, again, you're not going to get a lot of trades, but they perform really well. And, you could go 2 weeks without a trade on GBP and you get into a good setup and it might make you 10% in one single currency pair setup. So let's take a look at GBP AUD. It's been doing 10% a month by itself on a $500 account. By itself. With only 10% drawdown. Using swing settings. It's taken 64 trades. Won 89% of them. And the reason I show you guys some of this data too is you have the full ability to choose what pairs you want to run. If someone's conservative enough, you could just run the ones in green. You're not going to take a lot of trades, but when you take them, they're going to be great trades. You could run the ones just in white, right? It's kind of up to you. But when we take a look at some of the ways these GBP pairs have performed since we started, it's absolutely incredible to see the win ratios, the profit factors, positive pips caught. And the data continues to back it, right? I'm a big data person. I don't want to argue about what potentially could work or what someone thinks makes sense. No, let's look at data. And when you take a look at it, it's just these all have been performing great. Specifically, GBP, AUD, NZD, and USD. GBP CAD too, but these ones been doing 10% a month on a little $500 account with just one currency pair running. Take a look at that. That's incredible. 12% drawdown, 10.22% a month. And we're talking about a $500 account. I'm going to get back into the chats and keep reading through here. All right. Somebody said, Rick, great question. He said, how do you deal with swap fees? Any way to minimize those? What's interesting about swap is sometimes you might get on the lucky side of it. And what I mean by that is oftentimes when one way is you're getting charged. The other direction can be positive, meaning there's times where you actually get paid to hold trades. I'm not sure if any of you have ever looked at your comments, and you might actually see positive swaps every once in a while. So there's really no way to minimize those. And what I mean by that is many brokers that advertise swap-free accounts, they're just charging it in a different way. They're always going to get their money. What I need to tell you about brokers is the house is always going to get their money somehow. And a lot of times with many brokers, it's B-book when they advertise things like that because they have to make their money elsewhere. So, the key is if you're on an A-book broker, your swaps are always going to really be there, unless they're just, you're asking for it in, say, like a Islamic account of some sort, which they're just going to relabel it and name it something different. London Arrington said he's in 1,700 drawdown on a 5,000 accounts, pretty high. And he said most drawdown counts from CAD CHF, USD CHF. He said it's a part of the game. It's a part of the game. I mean, you understand. And let's take a look. Let's go over to TradingView. I want to take a look at some of this stuff too. And I know Steve even said that he thinks USD CHF. Steve Vetterl sent a thing saying, if USD CHF broke a certain level, he saw it going up more. I mean, it's a part of the game. But eventually, just like CAD JPY or AUD JPY and many of these, they got to start to melt. There's only so much that happen. The big thing is if we're looking at right now where we are historically, is a year ago was coronavirus, and we're a year later, and what we're seeing and witnessing is many things return to prior corona levels, which it could be not ideal if you're on the wrong side. But let's take a look at USD CHF real quick. I don't want to get Steve's raising his hand. Steve, where's put something in the Q&A for me, brother, because I don't know what to do with the raise the hand thing. But let's take a peek here. Full feature chart. Now, I'm no chart expert. We got plenty of you on the line that are, but as we're looking back in time, we're seeing a major, really what I would consider to be support level right here, resistance, whatever you'd like to call it. Right now, forming resistance, but if it finds support here, yeah, I would say that we're going to go up a little more on that one. But we can see this was a violent run up right here itself. Very, very violent. It's been a straight uptrend, and anytime there's a straight uptrend, chances are we got to have some pullback always. That's just the name of the game here. Obviously, the key is, when does it come and can you withstand a large move? And that's what I always tell people is you want to be able to withstand a large move. So you have to look at your settings and go, hey, should I be decreasing how many pairs I'm trading? Karina Hastings says 50% drawdown, AUD CHF, CAD CHF, CAD JPY, and is this 3 different accounts? I see 3 different accounts drawdowns listed with different pairs. I see one of these has 4 pairs, and it's actually in less drawdown, the ones with 3 running. That's funny. Yeah, I mean, the key, like I said, is start to try to eliminate things as you can, right? Anytime you have multiple pairs open and you get into a period where you might say, hey, I'm in a larger, more comfortable drawdown I'm not used to. The best risk management plan is going to be to start to eliminate those different pairs that you can at the best time. That's what I would going to go ahead and do. And a lot of the pairs that I see are troublesome right now for people that we're listing. The only one that hasn't really been eliminated that I see is troublesome right now is NZD CAD for some people and Euro CAD, right? But CAD JPY and AUD JPY definitely were some troublesome ones. I've seen many people get out of those. I saw NZD JPY melted finally. But yeah, I mean, really the key is definitely no more JPY pairs for the most part, just EJ and maybe CHF JPY. They've been pretty good. Going through. David Harborough said EuroCAD 10% drawdown, 3% profit this month. Nick Myerson 100% profit month. DD majority of month. USD JPY pairs open most of the month. Yeah, it sounds about right. 4 entries. Yeah, it's about right. Yeah. Great question, Pamela. She said, I had 27 open trades with over 20 of them being CHF pairs. Why would the system overwhelm your account with the same type of pairs? Well, first, the system isn't programmed to not know to not take the same pairs. All the system is programmed to do, if we take a look at it, is to enter any pairs when the gears hit the entry, and then only to allow however many max trading at the same time. So here's obviously a moderate, more aggressive account right now with the smaller balance trading 4 max pairs. But the point in showing you this is that's what the system's programmed to do. Now, one of the things we're working on, which is going to be the biggest game changer, because most of what the current situation is going on for many people is your drawdowns coming on very highly correlated pairs, meaning that they are really just, they're going in the same direction, they're going to look the same. And the best example I could give somebody would be like NZD JPY and AUD JPY are 95.5% correlated. And if you go take a look at the charts, they tend to look pretty identical. And when we study that, same thing with Euro JPY. But as you study these correlated features and them going the same direction, we're going to build a filter for this. And the goal in building the filter, and this is an advanced feature, it's something that didn't seem necessary until the past, month, as things have really just started to trend and trend and trend. We said, wow, this makes sense. Let's build in a filter for correlation, so that, yes, the software will not be taking highly correlated trades or pairs all going the same direction. What we're looking to do is, let's say something is positively correlated, all right, and AUD JPY goes to enter a sell, and then let's say NZD JPY went to enter a sell. We're going to block NZD JPY sell, tell the software it can only take a buy. Now, this is not going to force the software to take a buy. It's just going to block the sell. And if buy happens, it will be allowed. But it's going to become a filter to essentially block situations like that from happening, similar to the current max pairs feature we have, which blocks the next trade's opening while those ones are open. And we would do the same thing with negative correlation, where, we would not want to negatively highly correlated pairs to take trades going, say, opposite directions, because, again, it's the same concept. So again, it's an advanced feature. We're continuing to work on it. And that's really one of the biggest next coming features for GearBox, because it's going to protect everyone in situations where the entire market trends and you just get into 3 highly correlated pairs, because that's never ideal. So we are working on the correlation filter. That's one of the big things to come in the near future. Again, it is probably at least a few weeks out, if not a month, because we have to test it, we have to verify it works, and we have to still decide, are we going to build it into GearBox itself, or are we going to actually make it kind of a part of either the GearBox manager or even its own file, which, also would require GearBox to be in master mode so that it could, potentially run and control things. We're working on all that right now and just deciding which way we want to go about it, which way is going to be the most effective and the most efficient. I do not see too many more questions going on in here. So let me take a look here. Charles said he sees trading for all pairs because he has some DD and EuroCAD, and that's a great risk management plan. Charles, we were just talking about that. Eliminate trading other pairs, just hold open that one until you get out of it if you can. And, again, that's why I educated this week with all the red folders and saying, hey, it's a good week to just eliminate pairs at break even, tiny loss, just to be safer, protect your capital, just like anyone. A lot of people got into the initial drawdown running a little more aggressive than some people maybe wanted to. And that's where, again, like I said, the past few weeks, we've also been saying in here, hey, more conservative users could look to lower their lot size. I've been starting to say it, every week. And especially I've been starting to say it, accounts above 25K will look to scale back lot sizes as their capital grows, right? Meaning if you have over $25,000, I wouldn't stick to the 0.01 per 1,000 rule. For safety, it's always wise to decrease risk by scaling back to 0.01 per 2K or even 0.01 per 3K as your capital grows. And the reason for this is because of a lot multiplier. The lot multiplier inherently is always going to be a little less aggressive on a smaller account than it becomes on, say, a larger account, as those lots can actually multiply. So that's a great, yeah. Andy said, Tyler, you said a few weeks ago, you cannot trade with money you have lost. Everyone should remember that. Be patient and not greedy, and you'll succeed. And you know, Andy, I'm going to tell you firsthand, the many times that I've seen, you know, drawdown get bad when using a strategy like this is I start manually trading with it. And I know there's many customers that do that and manually trade with their software. And the best thing I can tell you is do not start stacking orders when you see that something's gone X amount of pips and think, oh, it's going to pull back now. And now you start putting a ton of extra lots in the market. And that's, again, the reason I put the balance protection feature in. If you don't understand the power and the balance protection setting within GearBox itself, it really is supposed to be your life jacket, right? If a black swan event happens, if you get in three highly correlated pairs, that 25% balance protection, really, my belief is that if you do not put another lot into the market and just stop taking trades at 25% drawdown, yeah, like we talked about up top, there might be a situation where you get in a trade for 3 months, right? We saw a user in the beginning of the call say he just got out of GBP USD. He was in it for 3 months. Meanwhile, GBP USD has been crushing it for me, right? Maybe, you know, it was an earlier entry. What was going on? Who knows? All I know is there might be a time you get stuck in trades and they take a while to play out. But if you have balance protection, this is always going to protect you against putting too much risk or exposure into the market and just kind of saying, chill out. It's going to be fine. It's going to work out. You got 75% of your account as a buffer. And if you even don't think that's enough, put a little more in. But at 25%, if you don't put another order in the market and you just kind of chill out, most of the time, everything's going to work just how it needs to. Because as soon as you get out some pairs and decrease your risk, your drawdown goes down and it can take those next positions finally, maybe at the top where it needs to. But you ended up waiting out where there could have been 3 orders, now there's only 1, and you massively decrease any potential more drawdown or risk. And that's the key, is keeping yourself from running into any risky situations. Denville, and that, you know, that's a great example here too. Denville said 0% profit 3 weeks now, max drawn on 31%, waiting out CAD CHF, EuroCAD, JPY. And let's talk about that. I know Denville's account's up over 80%, I think, since November. But here we are, 3 weeks, no profit. Right? Let's go back and look at my more moderate swing account. Same thing. You know, it ran into a troublesome time, took some losses, a good chunk of losses, because it was running, you know, 6 pairs on swing, which is, you know, I would consider highly aggressive, but it came out of it all. It had a month it made no money. It had a month it even took a loss. I don't think Denville's even taken a loss yet. So, you know, if you come out without taking a loss and just had a month of no money, and then you make a bunch of profit, that's a winning strategy. I mentioned this in the GearBox traders chat earlier too, that the situation I had where it's all really about patience in your trading game. If you have one losing month a year and 1 month you make no money a year, but the rest of the months out of the year are positive and crush it and do things like this, do you really care about the 1 or 2 months? I mean, obviously a brand new person might not be too excited, but again, remember, this is trading. We have to have realistic expectations. And I think the big thing is a lot of people don't set realistic expectations, that you have a trading system that can be highly profitable, even with somewhat riskier strategies, right? And again, you know, the key is to decrease your risk. Take a look at the data I share weekly. Come up with your own ideas. I know somebody in here could take a look at GBP NZD and go, this one pair is doing 10% a month. Why do I run any of the others? Why don't I just run GBP NZD and multiply my lot size? I mean, you know, some people might get ideas. And that's the part of GearBox that I designed GearBox for. I designed it for the people to take the data and create their own strategies. You may just say, I'm just only going to earn GBP and ZD and swing strategies and run a higher lot. Maybe I'm just going to run the GBP pairs and run a higher lot, right? Or whatever it may be. You can take all this data that I'm sharing every single week and make your own ideas and thought processes. This is your capital you're managing. And when you're managing your capital, you should take a look at the data and say, what's going to work best for me? What's, obviously a new person coming in, we know the system's going to work. But if you understand this data, you might just say, hey, I'm just going to run GBP USD, GBP NZD, GBP CAD, GBP AUD. I don't care if I don't get a trade for 2 weeks. If on week 3 it takes a trade that takes a month to play out and makes 20% profit, okay, like that's, and you have to understand a lot of that stuff. That's really the key in understanding how to optimize your own strategy with the data provided on what works best and what's not working best. Obviously Euro JPYs had a higher drawdown than the GBP pairs and made half the profit, but it's still performing 6% plus a month, right? So when I made the best performing list, I compared, it looks like AUD CAD recently is coming into that list too. It is, it's been crushing it all March. We're gonna have to highlight AUD CAD. Where is AUD CAD? There it is. Yeah, we're gonna have to highlight AUD CAD. AUD CAD just got itself in that list. Only 22% drawdown, doing 12% a month. Consistent, multiple times positive equity. 79 trades. It's won 84% of them. Like I said, the key in this data is to just make sure that people design experiences that are ideal for them. Obviously EuroCAD, you can see still really hasn't breached that high drawdown for me, but the difference is somebody got in it at a different time. Where I was maybe getting out of it, somebody else was getting into it. Who knows? But again, from what I see, EuroCAD still is a play. It hasn't produced the highest. It is really CAD JPY. Now CAD CHF, I know some people mention that. I see it now as troublesome, but I look at the monthly. So first I look at how much they're monthly doing in top performers. And then I also was looking at the drawdown that they were creating. And that's where I originally made a list of what I thought were best performers. NZD USD could also be one. Now I didn't like NZD USD specifically because I also saw another account of mine that had got into a move on it, but it performed very well here. 7% a month, 40%. Again, these are swing settings. This one only wants 70% of trades though. So for me, that's, if we went, I don't have a way, I think, to factor that on this list. Maybe I do. It actually looks like I do. Average loss now, longs one, short run expectancy, profitability. I get delete a column. What do we want to get rid of? Profitability, cool. And if we arrange by profitability, GBP CAD won 96% of trades with swing settings. That's pretty cool. CAD CHF, even though we're complaining about it, previously it was winning 92% of trades. Right now it's in a trend. Okay, as long as we get out of it, the numbers still are there. It was winning 92% of trades. GBP NZDs won 90% in swing settings. GBP AUD 89. So we take a look into the profitability. Euro CHF right now, I know some people are in moves on. AUD CAD, Euro AUD, USD CAD, AUD NZD. We look down, and if we get down to some of the no good ones, we get into some losers here, right? That just weren't winning most of them. Let's keep going. David said, is there a way that you can possibly make all of these MyFX books public so that we can, look at the data you share? Yeah, absolutely. I can do that. It's just a little time consuming to verify them all, but probably time I do that also, that we can put these all into a list and people can study this data and look at these different pairs and actually track this whole portfolio of the GearBox one pair accounts. I'm not seeing too much else go on here. So I'm going to get into the next coming week, what we need to look for. And I'm going to tell you right now, guess what next week is? Anyone know what next week is? Tell me in the comments if you know what next week is before I go to Forex Factory. Someone's got to know what next week is. NFP, April Fool's. Sounds like a scary day in the markets. All right, well, let's get into that then. So we have NFP coming up this week. And as always, it is NFP week. So during NFP week, you're going to want to be more conservative, as always, in your strategies. So we also have not only NFP, we have OPEC JMMC meetings. So OPEC is also a big one. This has a lot to do with different things such as oil. And because of that, expect that to also potentially be volatile for all currency pairs. NFP is volatile for USD pairs. OPEC is volatile for all pairs. So understand that this upcoming week, there isn't really any red folders up until Thursday. So what would be my risk mitigation plan? First, on any new trades, I'm going to decrease lot sizes this week, right? Based on what's been going on, the current events, things trending. I'm going to go on the more conservative side with my lot size. I'm going to probably take all my accounts down to 0.01 per 2K instead of 0.01 per 1K. I've always ran 0.01 per 1K. I've been educating recently. Sometimes you might want to go a little more conservative. This is one of those weeks I'm going to personally myself do it, just because you have OPEC and NFP in the same week, as well as the current trending conditions that we've been facing. The next thing is I'm going to look to get out of as many pairs as I can before Thursday to Friday this week. Why? Because again, it's a good risk mitigation plan to always manage, right? We've been running GearBox through everything since we started, but when you get into weeks where some people have been stuck in trades or got into CHF pairs or things start trending, we take into action those times where you do need to have a little bit of a risk mitigation plan to close out pairs. Just like I showed in my my Telegram this week, you would do the same thing and just look to get out of as many ones as you can, looking up to Thursday. And if you're using the MAV version, maybe stop approving trades after Wednesday and look to get out of as many as you can. Just that would be probably how I would handle the coming week, even though chances are many of these events are going to go in our favor. It's still always wise to not hope that things go in your favor, but to plan that they don't. And that's the reality in trading and understanding how to consistently make money. Zan said, "Hey Tyler, plan to put in action what you said of having one max currency pair." I'm not sure. He said, "Would it still execute the TP and stop loss levels?" Yeah, of course. I'm not sure what you're asking me there, Zan. But if you're saying you just want to run one currency pair on GearBox and increase your lot size, then yeah, I mean, like I said, the one pair data suggests you can do that. If somebody just said, "Hey, I'm just going to run GBP NZD," okay, it's won 90% of trades. It's had a 12% drawdown on a $500 account. And it's been doing 10% a month on this $500 account, right? I personally have an experimental account. I haven't even connected it to my FX book. It's only running GBP NZD, GBP AUD, GBP USD, and GBP CAD. I have a 10K live account doing that. It's actually been very slow this month. I can tell you that, and it's been very slow. You can see absolutely this month we've done like 3% on. Yeah, it's been very slow on GBP NZD and then many of the GBP pairs this month in comparison to prior ones. If you change settings like SLS and manager, will that affect pairs with open trades? I'm not sure what you mean by SLS, David. Stop losses, is that what you're saying? So no, it won't. So if you change your stop loss in the manager, it will starting lot size. Okay, that's different. Starting lot size will not affect pairs with open trades. No. How GearBox reads everything is based on the trades that were already opened. So it's just going to base everything on your position size multiplier you have versus what lot size was last open. So it won't affect any open trades if you change your lot size, as we calculate off the last open position and the position size multiplier. Now, what will affect your open trades is if you change your position size multiplier. So let's just do a quick overview. It's a great stuff to talk about for those of you who are still on the call. Let's talk about what affects open trades. First thing that's going to affect open trades, max pairs trading. If you ever change this to a higher number, it's going to take immediate effect globally on the entire account. What else will affect it? Starting lot won't, but if you do your position size multiplier, this will take immediate effect. Your next trade will be at the next level. If your range multiplier you change, same concept, it'll take immediate effect. These two settings take immediate effect on open sequences. Your range between gears will not take immediate effect, and neither will your lot size. These will only take immediate effect on the next beginning ghost trade sequence going forward. Your max number of gears will take immediate effect. Stop loss will not take immediate effect. If you change your stop loss, it will not affect open trades, but it will, any new trades will be taken with that new stop loss, but your open trades will not change. If you want to increase a stop loss on an open trade, you have to manually do it or delete it entirely. If you change your take profit setting, this will take immediate effect. I don't know what currency pair we're clicked on right now, and if I even have an open trade on it, I don't. Let's click a currency pair I have an open trade on, and I'm going to give you an example. Let's go ahead and go to EuroCAD. Where are you at, EuroCAD? There you are. We're going to go to EuroCAD, and I'm going to go ahead and I'm going to change my take profit setting right now to ghost trades plus real trades. And what you're going to witness, once this box goes away, I had 4 terminals open, so bear with me. Definitely too many terminals open. Got Neo here, got Arrow here, got another GearBox here. Got the classic no responsive. Point is, that'll take immediate effect, but don't run 4 terminals that are running 25 charts all at once. Mainly a lot of this is Arrow right now, but the new Arrow is coming out that will make things much, much faster. If you guys haven't heard about Arrow 4.0. I give up on that one. How are calculated take profits with double TP made? I thought it was fixed 60 pips, but I'm noticing it's not always the same distance. And goodbye. I'll reopen that one. How are calculated take profits with double TP made? I thought it was fixed 60 pips, but I'm noticing it's not always the same distance. For example, I see a TP 128 pips from last trade of the sequence with 3 trades. Okay, so David, it's 60 pips on the first real trade. So that means on the first trade entered, double TP 60 pips. But if it has to cost average, of course, it's going to be more than 60 pips because 60 pips has already gone by the time you get to your second entry, right? So double TP is calculated. Your first entry, 60 pips, but as it cost averages, it obviously is going to lengthen. Now, we have noticed that after like 3 or 4 cost averages, that double TP, the take profit still really is pretty high. So we are working on a new way of calculating to get double TP. Right now, double TP is less aggressive than Ghost plus Real before 3 cost averages. Once double take profit's gone over 3 cost averages, its take profit actually is longer than Ghost plus Reals. And we've been noticing that, and we're working on some different ways of calculating because we believe that Ghost plus Real should always have the longest take profit. Same with real trades only, to anonymous attendee who just asked. I see that, yes, my battery is about to die. I believe, though, that's pretty much everything for the day. I don't see anything else really going on here too much that I can cover live on the call. So with that being said, I appreciate you guys all tuning in, as always, on this wonderful Friday. I look forward to a great trading week. Remember to have a risk mitigation plan in place for the coming week with OPEC and NFP to look to try to get out of as many possible pairs. Now, what I can tell you is if you're a brand new user, this is going to be a great week for you. But if you're somebody who's been in DD, have a risk mitigation plan. If you're a brand new user with no drawdown right now, you're going to love this week because chances are these events are going to equal you getting into awesome trades. So again, you could be one of two different users right now. You're somebody who's maybe stuck in some trends, or you're somebody brand new that's looking to get into some trades. And if you've been looking to get into some trades, this is your week. If you've been in some trades, remember your risk mitigation plan. And thank you, as always, everybody, for tuning in. And I look forward to seeing you on the next one.